Hey there, tech aficionados. Welcome to Tuesday's edition of the Tech Stocks Daily Podcast, where we dish out today's juiciest tech market headlines. Hot off the press, we've got AppLovin's electrifying 29.8% stock surge fueled by AI-induced revenue magic. Meanwhile, Vimeo's earnings surprise has shareholders dancing, and Teradata puzzles with a mixed cloud transition report. By the end of this episode, you'll understand why Compass is the momentum stock par excellence, out here setting records on the NASDAQ like it's no big deal. Whether you're an investor, tech junkie, or just love a good market story, stay tuned for a whirlwind of insights, numbers, and perhaps a chuckle or two. Hang tight, it's going to be tech-tacular. Ladies and gentlemen, let's dive into today's tech news spotlight, AppLovin. This rising star in the world of mobile app monetization is turning heads and wallets, as the company's stock skyrocketed by an impressive 29.8% throughout October. Now, before you start picturing executives doing the happy dance in their boardrooms, let's unpack why this is happening. AppLovin, until recently, was kind of like the quiet genius sitting at the back of your economics class. Not too noticeable at just a $3 billion market cap at the start of 2023, but then boom, it began showing off with revenue up by nearly 17% in 2023, flipping a hefty $193 million loss to a healthy net income of $357 million last year. And that's not where they stopped, oh no. Fast forward to the first half of 2024, and they cranked up revenue growth to a striking 46% and pocketed $546 million in net income. Grab that abacus, because those numbers are pretty wild. Fueling this awesome surge is AppLovin's software revenue, boosted by none other than artificial intelligence. Need we say more? It's like giving steroids to your bank account, really. This growth spurt caught analysts' eyes, and suddenly, everyone started shouting about AppLovin's potential like auctioneers at a tech stock flea market. Analysts either picked up coverage for the first time, or decided the stock deserved a shinier and more optimistic price tag, which drew attention like a penguin at a beach party. With AppLovin's Q3 financial results set to be unveiled on November 6th, all eyes are eagerly optimistic. In fact, analyst expectations are that AppLovin's revenues could climb by about 30.8% year over year, hitting the $1.13 billion mark, paired with a massive earnings growth projection of 216.7% for this quarter. Let's be real, that's the kind of growth we're only slightly jealous we didn't hear about at the latest virtual stock market, Happy Hour. While AppLovin flexes its success in the gaming app world, it's setting its sights on new domains like connected TV. And guess what? They've rolled out something big, a program that lets e-commerce websites scoop up ad inventory and redirect potential shoppers from mobile games directly to their storefronts. One almost imagines a borderline heroic mission of rescuing abandoned shopping carts across the globe. Looking ahead, AppLovin's long-term game plan is to spread its wings beyond being the ultimate game ad guru by charming its AI-fueled revolutionary tactics to non-gaming terrains as well. It's almost like if your dog learned to order pizza and change the TV channel for you. With all this momentum and a reputation for consistently beating earnings estimates on its side, AppLovin stock presents a compelling opportunity for investors, dancing on the edges of the undervalued line. So, while the stock might have already sold out its opening act, there's definitely room for an encore that investors don't want to miss. Grab your tickets and keep an eye on those future earnings reports, people. Hey there, tech enthusiasts. So let's dive into why Teradata has been making waves in the news today. It's a bit of a roller coaster for them right now. Teradata, the hybrid cloud data management superstar, recently released its Q3 earnings report, and, well, it's a mixed bag. Despite beating analyst estimates in some areas, their stock took a nosedive. Why, you ask? Let me break it down for you. First up, the good news. Teradata reported third-quarter revenues of $440 million, slightly above the $438 million from the previous year and beating analyst expectations. They achieved an impressive adjusted earnings per share of 69 cents, which zoomed past the anticipated 53 cents. Their public cloud annual recurring revenue also showed a solid 26% increase year over year, signaling that their cloud solutions are still in demand. But here's where the waters get choppy. Despite these positive results, Teradata's management has given somewhat conservative guidance moving forward. They foresee a deceleration in public cloud ARR growth to just 18 to 22% in the fourth quarter, citing that customers are opting for more gradual transitions to cloud-based systems. This cautious outlook has investors feeling uneasy, reflecting concerns about the pace of Teradata's journey from on-premise systems to subscription-based cloud services. Let's talk competition. The company's transition strategy aims to pivot from traditional lucrative upfront sales to more modest yet steady cloud subscriptions. However, this shift means revenues can plateau or even edge downward in the short term, as indicated by their flat revenue report and expected total ARR decline of 2 to 4%. The buzz is all about how well Teradata can navigate this cloud transition maze amid stiff competition. But wait, there's silver in this cloud. Teradata's not on the back foot entirely. They're forging ahead with significant customer wins, which include a major U.S. insurance firm and a large bank in the Asia-Pacific region, picking up steam with new deals for high-performance data needs. Their advancements in AI, particularly the enhancements to the ClearScape Analytics platform, have been positively received. They've introduced flexible language models and integrated with NVIDIA's AI platform, aiming to bolster them as a strategic AI ally in the tech sector. Despite a fall in shares and struggles within the competitive landscape, Teradata's long-term flexibility, bolstered by its digital evolution, hints at the possibility of recovery. Their cash and cash equivalents are ticking upwards, helping buffer them against the challenges of seamlessly pounding out their place in the cloud market. So what does this mean for potential investors? Well, Teradata's stock might look appealingly priced right now, trading at about 12.2 times the forecasted 2024 adjusted EPS. But for those waiting in the wings, it might be wise to watch whether Teradata can spur clarity and achieve growth amidst a slowing cloud migration climate. They're not out of the game yet, but every quarterly report is a chess move in the grand match of cloud dominance. There you have it, folks. Keep your eyes on Teradata as the cloud computing world keeps shifting gears, one data pack at a time. Hold on to your remote controls because Vimeo is making waves in the tech scene today. The video platform that's transitioned from B2C stardom to an enterprise powerhouse is catching the spotlight, and for good reason. First things first, Vimeo just released its third quarter financial results, and let's just say Wall Street is impressed, perhaps even doing a happy dance. The company reported earnings of 5 cents per share, a healthy jump over the analysts' modest expectation of 1 cent per share. And when it comes to sales, Vimeo raked in $104.564 million, surpassing the anticipated $99.65 million. A round of applause. Now the future's looking pretty bright too. Vimeo upped the ante with its fourth quarter sales guidance, predicting $100 million in sales versus the gloomy market forecasts of just $97.114 million. It seems Vimeo is confidently saying, challenge accepted. So why exactly did Vimeo's stock rocket away like a caffeine-fueled productivity spree? Heading into today's buzzworthy events, shares skyrocketed an astonishing 42%. Let that sink in. That's the share price equivalent of finding an extra USB cable when you really need it. Here's why tech investors are head over heels in love with Vimeo right now. While overall revenue may have experienced a slight drop of about 2% year over year, the company's core has gotten lean and mean. Here's an eyebrow-raising stat. Bookings for Vimeo's enterprise offerings shot up 39% and now make up a solid 25% of its overall bookings. This enterprise growth is the hot sauce in Vimeo's profitability taco. The big picture isn't complete without addressing Vimeo's killer gross margin, a steady 79%, and the net income figures climbing to $9 million from $8 million a year earlier. This shows Vimeo has, without a doubt, fine-tuned its spending, optimizing earnings per share and elevating free cash flow to unprecedented heights. Vimeo's stock was sitting at a cozy evaluation prior to its Q3 release, trading at a mere 2 times its sales and about 16 times its free cash flow. In layman's terms, it was an undervalued tailwind, just begging to be caught by savvy market surfers. The newfound buoyancy in their pricing reflects the promise investors see if Vimeo's enterprise platform continues to set records and expand. So where does Vimeo go from here? It's all about maintaining this solid profitability trajectory while scaling its enterprise platform. If they nail it, this isn't just a high tide for Vimeo. It could signal the beginning of new record peaks for the company. Grab some popcorn, because the next act could be even more exciting for Vimeo and its investors. All right, tech enthusiasts, hold on to your gadgets because we're diving into some market momentum magic with Compass Inc., the real estate tech company that's been turning heads on the NASDAQ. You might wonder why Compass is in the spotlight today, and I've got all the juicy details for you. Compass has made waves as a top momentum stock, and for good reasons. Let's picture momentum investing as that wild roller coaster ride, up, down, and thrilling all around. Investors engaged in momentum trading generally follow a stock's recent direction. Think buying high and selling higher. The idea is that once a stock starts sprinting down a path, it might just keep darting forward. For Compass, the recent stats painted quite the promising picture. In the past week, Compass shares catapulted by 13.65%, while the broader Zacks internet software industry took a slight dip. Even zooming out over a month, Compass outstripped industry growth with a 17.46% increase. And if you've got a flair for the dramatic long-term results, you'd be thrilled to see Compass clear domination over the past year, a whopping 204.15% jump compared to the S&P 500's 32.85% escalation. That's like finding out your favorite series just got renewed for a whopping 100 more episodes. But what's even more compelling? Compass possesses a Zacks rank of 2 and a Zacks momentum style score of A. This is a pretty prestigious badge to pin on, indicating that the stock is trending upwards. With 2 upward earnings estimates in the past 2 months, Compass has managed to boost those financial expectations, revealing very solid promise indeed. Additionally, Compass glitters under the fast-paced momentum at a bargain screen. What's that? Well, it involves identifying stocks that not only ride the momentum wave stylishly, but also come at bargain valuations. This combo is as hot as your favorite tech gadget on Black Friday. What's even sweeter is Compass beta of 2.91, meaning it tends to move 191% higher than the market, or in simpler terms, it's got a lot of movement potential. And here's the kicker, its valuation looks pretty appealing. Even as it surfs the highs of momentum investing, Compass trades at just 0.62 times its sales. In layman terms, investors are snagging each dollar of sales for just 62 cents. Now, who doesn't love a good deal? So Compass Inc. emerged today in the momentum stock news arena, not just for its dynamic price movement, but also because of its exciting blend of solid forecast, rave of analyst reviews, and wallet-friendly stock valuation in the momentum game. Now it's over to you, my savvy viewers. What do you think about Compass' high-flying journey on the trading floor? Are you ready to leap aboard the momentum train, or cheering from the sidelines? Drop your thoughts in the comments below. Let's keep this conversation buzzing. All right, folks, let's put on our tech investor hats and zero in on AppLovin. With all the buzz surrounding its skyrocketing performance, here's what I'm thinking regarding buy, sell, or hold. Drum roll, please. I'd say it's leaning towards a buy, but with a hint of cautious enthusiasm. Here's why. AppLovin has posted some impressive numbers, flipping a loss to a solid net income and revving up revenue by significant leaps. Their explosive 29.8% stock gain in October is a testament to the market's recognition of this shift. More importantly, they're surfing the wave of AI-driven growth in the ever-expanding digital ad circle, setting sights on exciting terrains like connected TV and e-commerce integration. It's like seeing a tech genius in the making stretch beyond its current limits, kind of like your virtual assistant suddenly composing symphonies. Moreover, with earnings estimates looking optimistically rosy for the upcoming release on November 6th, AppLovin seems to be tapping into a market that not only demands innovation, but is willing to reward it massively. Let's not forget, the analysts are pretty bullish too, and you know what they say about following the money. That said, there's always the other side of the coin. With such rapid-paced growth, it's essential to consider whether this trend is sustainable long-term. Could the investors' bubble enthusiasm lead to a potential stock overvaluation? That's the plot twist we must keep behind our earbuds. Plus, diversification beyond the gaming realm may pose both opportunities and challenges. It's venturing into an unknown frontier after all. In a nutshell, given today's upbeat news and momentum, snapping up AppLovin stock seems intriguing for those with a taste for risk and a keen eye on growth sectors. But remember, stock magic comes with its share of risk, and one person's buy suggestion shouldn't steer your investment boat without a map. It's critical to do your own research and tailor your investment strategy to match your risk appetite and long-term goals. When it comes to stocks like AppLovin, always stay informed, essentially befriending facts to ensure you don't get caught up in a market whirlwind. So, what's your take on betting a piece of your portfolio on AppLovin's savvy charm offensive? Dive into the comments, and let's see if this AI-powered rocket ship is your kind of ticket or not. Wow, what a roller coaster in the tech world today. From AppLovin's sky-high stock surge fed by AI innovation to Vimeo's triumphant earnings surprise, these tech companies are stealing the spotlight and investor attention. Teradata is navigating the cloud puzzle with mixed earnings news, while Compass Inc. is on a thrilling high-speed momentum ride. Each company has its own unique journey, showcasing both the thrilling opportunities and cautious challenges in the tech landscape. If you enjoyed this amazing update on tech market shenanigans, hit that like button, subscribe for your daily dose of tech news magic, and share the love with fellow tech enthusiasts out there. Don't forget to swing by tomorrow, where we'll unravel even more tech twists and turns. See you then, Tech Fam.